Hey everybody, this is Dr. Tom Carr of drstoxx.com, also known as Dr. Stoxx, drstoxx.com. We've been in business every market day since October of 2002. 23 years, if you can believe it, just over 23. And I'm coming to you live from our live options room. We have two live trading rooms that I manage, and I share everything I'm trading. So if you like stocks, ETFs, and micro E-minis, you can join us over in the live trading room. If you are an options person, you can join the live options room. We only do long calls and puts. Every now and then we do a few income plays. And if you want to join both, you can do that at a 20% discount, just a 40% discount. Sorry. Go to the subscribe menu, scroll down. Live options room is where we're coming to you from today, and you'll be able to learn much more about what I do there. All right, I'm going to jump over to charts, and we're going to start by looking at some index charts, and then I do have a couple of lists that I want to show you as well. So indexes, let's go to the S&P 500, and give me a moment here. We'll scroll in on this. So it is an interesting chart, in part because off the April lows, which was the big tariff crash, and everybody got really scared out of the market, it went way, 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 way down, and all the sentiment indicators just flatlined, and the internals and the breadth and the distance away from the 20-period moving average and all that kind of stuff got really to extremes. And for the fact that it was over a temporary kind of condition, tariffs, which were mostly a negotiating tactic anyway, it was an obvious place to buy the market. We did. We went out and bought a bunch of stuff in our wealth building portfolio in the live trading room, and we started swing trading, and we had a really nice, easy time of it with soft pullbacks into the bottom of the linear regression channel, the 21, staying mostly above the 50. Every tag of the 50 bumped back up again. And then we had this little crack right here, a little crack. I don't think it was the first one since this started. Well, actually, I take it back. It was. This was the first closure below the 50-period moving average, and we were due that kind of thing. Why? Because the market needs to discount risk, and there is risk out there. We've seen the unemployment rate tick up a little bit higher. Jobs that are new jobs are being created are not too bad, but not as robust as it should be. The jobless claims is up there, 240,000 per week is about the line for recession, and we've been hitting around 220, 225. Numbers are getting a little bit high, and everybody's been worried about inflation. The government shut down for so many weeks, and we didn't know what the data was. We still don't know what the October data is for jobs, inflation, GDP, and a bunch of other things. So that's kind of the reason why the market got a little bit skittish. And we had this ABC pullback, right, off the all-time highs, ABC pullback, a little bit deeper than I would like it to have been, but that turned out to be, and I think this will prove to be, a near-term bear trap. So a lot of folks got out of the market. They sold because they were just scared of losing all their profits. Shorts jumped on the market, short. That pushed the prices down beyond the fair valuation of the market. And now we've had a nice 3-day rally right back up again. We have reclaimed the LRC, the 21, and the 50-period moving averages. Volume has been good. Not great, but good. But you had some kind of modest capitulation volume on the way down. Everybody got out. And as I like to say, if everybody's out of the market who wanted to get out of the market has nobody left to sell, and it can only go in one direction. So that's why we're going higher. Now, I do think that we have tailwinds, right? We've got the Fed, which is back on cutting at least 25 basis points on December 10th. That's a very good thing for the market. The market wanted that. We got it. And there's even some rumor out there that Trump is positioning to get rid of Jay Powell, and he's going to replace him with Bessent, and Bessent wants to cut 50 basis points. I don't think that's going to happen, but just the fact that the rumor is out there is helping the market be a bit more confident about the future. And so we've got the rate cut tailwinds. We've got some rotation coming into the housing sector, which is a huge part of the economy that has been really, really lagging. If that starts to open up, right? If home prices come down, mortgage prices come down, loans start going out there, people buying new homes, people building new homes, that is a big stimulus to the overall economy, and that's happening, and it's going to happen because it's inevitable. So that also means that opens up regional banks for the very same reason. It's a stimulus to cars, automobiles being bought. As rates come down, people start buying these big ticket items, and that triggers some initial stimulus in the economy, and that's kind of where we're at. Now, we're having some trouble, however, with some of the big tech sectors, and you're seeing like a Qualcomm and a Tesla and NVIDIA, especially, not doing all that well, right? Microsoft is way down, Facebook is way down, Netflix is way down. So there are sectors in the economy that are hurting, if not lagging, and that's okay, right? Because the market's a big thing, and when the money comes out of those big tech sectors and the big blue chip mags, it goes into these other lagging sectors. Biotechs are doing well, healthcare in general doing well, drug makers doing well, regional banks, big banks, car makers, home builders, and did I say biotechs? Those are the guys that you should be focusing on. And if you don't have any bonds, probably some exposure to bonds as well, because as rates fall down, bonds tend to go up, and bonds are in pretty good position right now to do a good breakout to some near-term highs. Now, I do think that there is a darker cloud on the horizon. I think after we get past the December FOMC, we'll probably see some pullback in the market, and it could get a little bit uncomfortable because I don't think that this low down here is the end of the story of this discounting. And we're starting to see, the AI bubble has been called into question. We're still not selling chips to China. There's still some tariff lingering worries out there. And then we really don't know what the unemployment rate is. And inflation, I think, is okay, but the unemployment and recession are hand in glove, right? So if people are not able to find a job, then the recession just follows like night and day. So I kind of think that's where we're heading. Not that we're heading into a recession necessarily, but the Fed is a little bit behind the curve, and they better get their act together. If we get 3 or 4 cuts in the next 3 or 4 months, I think we might be okay. But if we don't, we won't. But anyway, all that's to say, near term, we're good. We are gold, and we've got everything that we're in is just going up. And we had a little bit of a drawdown during this 4-week pullback in both of our rooms. We hit all-time highs about 2 weeks ago. We had a little bit of a drawback, and now we're making that up pretty quickly. So I like to see it. All right, so that's my play on the S&P. I do think that this line right here is going to break, and then we'll get a test up here about 6,900. This is on the micro futures contract. 6,900 test, I think by the time we get out to December 10th, but I do think that is going to be a sell the news event, and we probably will want to come into that date with some hedges in place. That's just my thesis. That can change. It changes all the time because we're always getting new input on the market, but that's where I'm at today. NASDAQ, I think, is a little weaker. We're still under a lot of that resistance, right? We're not at the 21. We're not yet at the 50. We've just climbed back into the LRC, but we do have a nice 3-day bounce. We probably will go a little bit solid and soft tomorrow, but it's the day before Thanksgiving. Thanksgiving Day market is closed. Friday's a half day. And the day before Thanksgiving and the day after Thanksgiving tend to be two of the most bullish days of the year. So I really don't think we're going to see anything like a pullback. And I think we can go all the way through the weekend, holding most of our longs open. We've been taking some profits along the way, but I think we don't really need to go to cash or anything like that, not until the 9th or 10th of December again. Now, small caps are getting, this is the other sector I meant to mention. Home builders, biotechs, regional banks, and small caps are good places to be when there is fear of recession on the horizon and rates are falling. And the Fed has promised now that we're going to get at least 25 basis points. I shouldn't say they've promised, but they're hinting in that direction. And very likely that that's going to happen. And here's the good news about the small caps. So unlike the S&P and unlike the NASDAQ, it is actually breaking out already. It met it yesterday, and it's breaking out today of that pullback resistance line. Now we're up to the 50, and the volume coming in has been good. And we've got three big green sticks in a row. There's a candlestick formation called the three white soldiers or the three green soldiers. That's what this is. It is a bullish formation, and it tends to precipitate another good leg higher. I think small caps are a good place to be. We have on some calls in the small cap index in the live options room, and they're doing great, really doing great. Okay, Bitcoin no-go zone, and until this pattern breaks to the upside, I'm going to call it a no-go zone. We can short it if it gets up to around 92 or so, 91.5, but it's not a long. I know everybody wants to buy Bitcoin. Everybody in my timeline on Twitter has been saying, I've been posting this chart, and they come back saying, no, it's it's oversold, blah blah blah. All right, it could. I really hope I'm wrong, and I would like to be wrong about both Bitcoin and Ether. But from a chart perspective, technical, momentum, trend analysis, volume analysis, there's nothing bullish here. Nothing, nothing, nothing. Same for Ether. Ether, I think, is maybe even a little bit worse because the trend to the downside is more established or better established. You've been in this downtrend longer with Ether, and I think this could get all the way down under 2,000 pretty easily. Bitcoin, I'm not exactly sure where it will stop, but I'm on record as saying 75K, and there's a guy in my pro group who shorted Bitcoin in the middle of October, right, somewhere in this area right here, and he's out saying 75K. So there's confirmation there, I guess. But yeah, 75K for Bitcoin, 2,000 or less for Ether, and then we can talk. But I'm totally willing to destroy that bias altogether if and only if we break out of these downtrending channels, and we're nowhere near that. Okay, gold, I think, is probably just going to be really flat like it's been the last week and a half, just as it was over here for about 2 weeks. Gold usually rolls over. Gold usually goes up when the Fed is cutting rates, and it can go up when there is inflation out there as a hedge. But we've got falling inflation, and we've got a Fed that is hinting at being dovish, but not quite there yet. So I think gold is kind of in limbo. I think gold still has some room to the upside, but I'm just not interested until I see a little bit more constructive breakout. I think I'm going to be more interested when it's above that trend line, which it could be there tomorrow, right? Silver, I think, is a little bit better, and it double topped. It came down, nice rounded bottom off the 21 period moving average. Things are just a little bit stronger, right? The momentum is a little bit stronger with silver, and it is now starting to pull out of this rounded bottom. But it could get stuck right up here, 53.50. Again, I don't think silver is the place to be. Shiny metals in general, not the place to be. Crypto, definitely not the place to be. One place to be, which we are in with the live trading room, is in a shorting natural gas. So it topped out up here. We've got all kinds of bearish divergence up there at the top. Heavy volume coming out of this index today. And we've been short for about 4 or 5 days, and we're doing really well so far. We've been able to move up our stop on KOLD. I don't know exactly where this is going to go, but there is a gap down here at 3.8. I think just probably down to about 4 is as far as this will go on the current run. Yields are coming down, and they should, because rates are about to get cut as well. And this looks like it's picking up momentum to the downside. That means bonds are going to the upside. You can play that with TMF. And I think you probably have a good 3 or 4 weeks left in the bullishness of bonds for a swing trade. If you want to, invest in bonds, go for it. But they are at pretty low prices right now, historically speaking. Okay, so I'm going to show you some charts of interest, and I've got 2 lists here that I'm going to introduce you to. One is my orange list. So let me take you over to Black Box Stocks. I subscribe to a service here called Black Box Stocks. It provides me with option flow, calls and puts, and I can configure the kinds of trades that I see on this flow chart by going to this little icon here, and I can set these to show only calls and puts that are bought, only calls and puts that are sold, right? Which typically is a different kind of trade. I can do it by sector. I can just do stocks. I can just do ETFs. I have these toggled on so that the minimum trade amount is $100,000. So that's usually pretty significant professional money going into these. And I can go all the way up to $1 million if I wanted to, and sometimes I do. But right now we're just looking at 100,000 and above, 100 contracts or bigger, at or above the ask. So these are only buys, long calls and puts. I've got both calls and puts on, and I've got all the flow colors on, and the flow colors refer to the kind of trade that's going on. Some are kind of broken up into smaller bits and they go in really fast. Boom, 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 boom. Some are just a big block that goes in at the same time. Some wipe out all the open interest with huge trade, and there are just different ways of configuring that. And those are the colors here. So white is the least significant, yellow is the most significant, and purple is somewhere in between. On the other right side over here, I have unusual alerts to very unusual option flow. So the AI algorithm pulls out of all this flow only those that are, like well above open interest, or they're paying way more than the ask, or a really big lotto play where they're going way out in terms of the strike price. There are different ways of configuring this, but I can see what the unusual option trades are. And every now and then, maybe a couple of times a day, 3 or 4 times a day on an active trading day, I get these yellow gold alerts, alpha gold alert. These are the most unusual of the most unusual. And they're only on the call side, and they're only bullish. So when you see one of these, I like to make a record of that chart on the day that it got the alert, and then follow it from there. Sometimes I get in to that trade right off the alert because I really like everything else about the chart. NVIDIA came up today, and I'm not a buyer of NVIDIA. I'm afraid to say I think this gap down today, the fact that the market's doing really well today, everything's been rising higher. Yeah, NVIDIA is off the lows, but that downside momentum of ever since the earnings, which were great, absolutely fantastic, but the market didn't like it. We've been on a straight shot lower. So 196 down to 170, and we're still at only 175. So for me, I need to see NVIDIA maybe build out a little bit of a base down here and then get up above some range highs, and it's not doing that. It's still setting new lows. As long as it's setting new lows, I'm not interested, but I'm putting it on the list, and I'm going to put a little arrow right there on the day that I got the alert. Let's go back and look at some of these others, okay? So this is Oscar. It got an alert down here, which was priced at 1360. Unusual call volume on that day. And then a week or so later, it shot way up on some news. I don't even know what the news is, but I assume that the people that bought calls on that day knew that something was coming, right? Maybe they have somebody on the inside, or maybe I don't know how they do this. They intercept calls or whatever. If you read Jim Cramer's book on how he managed his hedge fund, he wasn't always, shall we say, in the ethical camp with some of his strategies. So I suspect that's what happened here with Oscar. Someone knew something, or at least had a good rumor of something going on, and they probably sold out way up here, which was a good $3 higher than where it was on the day of the alert. So pay attention to these alpha gold alerts, right? They are important. Now, Tesla is a very well-traded, thickly traded stock, and it gets a fair amount of alerts over the course of several weeks. But I just am marking this out. So it got an alert on this day. It was not very good for the next 4 days, but then it shot up with the market, shot up quite a bit. Now, I'm not interested in Tesla just yet. I think we're getting close, right? This is what I mean, by the way. This is what I want to see NVIDIA do. It has come down, got well below the LRC and well below the moving averages, and it's still down there, whereas Tesla built out this base, right? It's building out this base. And if we look at the tops of the range, we're not quite there yet, right? There's a very significant top of, you have kind of two ways of measuring the top of the trading range, the most recent trading range. One is the closing prices, and the other is the intraday highs. And I think both of those are significant. And we're at the one, but still well below the other. So, but this is what I want to see happen with NVIDIA. I want to see it go sideways for a while, build a range, test the highs, test the lows, and then break out above that range. Then I'm interested. Tesla's getting there. And maybe next week, we can start looking at some longs in Tesla. Apple's been great, strong, strong, strong. It got alpha alert about 4 or 5 days ago. It's been up ever since. We followed an alpha alert in Caterpillar on that day. We bought calls in the live options room, and they did a little bit tricky this morning because we were able to move up our stop to protect some profit, and then it flushed out this morning and knocked us out at that profit stop. So still a viable trade. I still have a couple of the calls on myself. One call, rather, I should say, because they're pretty expensive, and it looks okay to get back up above. So this is a nice looking, what I call a power gap. Right? Here is your earnings gap right there. It came back down inside the gap a little bit, but it didn't close it all together. That's kind of my rule of thumb. If you have a gap up on earnings, it can come down and test that gap, the top of it. You can get a little bit into the gap. It just can't close the gap. Once it closes that gap, then it's all bets are off. It's no longer a power gap. But this one kept the gap open, based for a little while. Now it looks to me like we're breaking out of that pullback. Crowd got one heading into earnings yesterday. It's doing okay today. IONQ got one yesterday. Was really up nicely from there, holding near the highs of yesterday's bar. OKLO has just not been very good, and frankly, I'm not sure when this happened because I don't have my arrow on there. Yeah, no, sorry. I think it was yesterday or the day before. It might have been on that nice little hammer candle there. But in any case, it's not doing very well since. But that's one exception, right? Google, power gap. We got into GGLL in the other trading room, the live trading room. It sailed way up for us. We were able to get out at a very nice profit. It went a little bit higher. It's come back down to pretty close to where we got out. I don't really want to buy it again because it's starting to look a little toppy, but that was a nice trade, right? Really core. Did two days, boom, boom, and then we're out with a big profit. Avgo, it was just today, so I can mark that one right there. And NVIDIA was also today. All right. Now, the other list I'm going to show you, and then I really need to let you go because I need to be out of the room. I need to be off the mic in about 8 minutes because I have a client call. This is my greens list. So these are stocks that are setting up or have set up nicely for a run higher. And they have a very good, because of the setup, they have a very good risk to reward ratio. In other words, you're not risking a whole lot to the downside, but your upside is still very significant. All of these are in uptrends. All of these have shown a pullback to support of some kind. And not all of them are in breakout mode just yet, but they're getting there, right? So let's just go through some of these. TSM. This is the pullback. You know what? I updated my charts on the laptop during the lunch break, and of course, they're not going to be saved here on the desktop. Anyway, TSM, CEG is an energy play. It is forming a base down here in the LRC. There's your resistance trend line. It's not ready to go, but I do like the MACD pinch. The cycles are all rolling higher. This, by the way, is a new MACD indicator. Well, I don't know if it's new, but it's new to me. And what is it called? I can tell you because this is free. Hold on. I don't have enough space. I've got too many indicators on here, not showing me. Oh heck, it's not there anyway. Where is it? Well, I'll find out and I'll drop that name in the room. But it's a MACD indicator that has been tweaked a fair bit to give you very clean and clear buy and sell signals. And I have to admit, every time I look at a buy signal down here below the red line, it should be a green line actually, then you get a pretty good run from there, right? Here's the crossover right there, and it ran very nicely, and now we're in the process of playing out a crossover. Qualcomm, here is your pullback line. We're getting, that's a nice soft 45-degree angle pullback, building a nice little base in here. That's what I want to see NVIDIA do. Hasn't done that yet. APH, one of the nicest charts and one of the strongest companies on my market surge A-list scanner, looking very good. Big day yesterday, holding near the highs. VRT, energy play, data center play, looking very good. In fact, I really like this setup right here. It's just a nice soft pullback. Here's your base, almost 2 weeks long, and pinch in the MACD, fresh MACD buy signal. Cycles are all rolling higher, including the big granddaddy down here, the big one. And that looks really good for a big move higher. PLTR is not quite there yet, and it has been a bit of a sharper pullback, and there's a nasty gap right there at the top off the all-time highs. That's not what you want to see. So it's not a perfect chart, but everything else is kind of lining up nicely. Datadog is going to need some time. Big slam because of PA&W. Palo Alto on earnings was kind of a miss, or I'm not exactly sure what happened there, but Datadog trades with that stock. And it's starting to hold the 50-period moving average. So we want to see a nice, maybe a week or 2 weeks based build down here, and then we can trade the breakout. CLS, great company, big moving stock, nice soft pullback, big green sticks, right? That's what you want to see. Frog, I'm in this one actually already. After mentioning it in the room yesterday, there's your breakout. It's a power gap. That is a classic power gap. Big up on earnings, kept going further, came back down to test the top of the gap, and now starting to break out of the pullback. Perfect. We want to be in home builders, and we are in the live options room. We've got calls of nail, and today is breakout day. I don't normally buy big green sticks. I have a whole rule saying don't buy a big green stick. But if it's down at the bottom of a long pullback like this one right here, it's not horrible to buy on that day because maybe you get a little better of a price the next day, but it should continue higher shortly. NXT, we're long shares of this one in the live trading room. This is a solar play, the second best solar play in the market per fundamentals. And I like this. This is the base, right? Rounded bottom, starting to push up higher. Pinch in the MACD. Cycles are where you want them. Fresh, just about a fresh stochastic. So this one is, you could buy this one today and I won't kick you in the pants. Wolf is it's a data center play of some kind, but I'm not exactly sure what they do, whether they do the energy or the quantum or the servers or whatever. But anyway, it's a nice looking rounded bottom base breaking out today. We might even get long some fun money calls in this one. App is a very good enterprise software play, but has been kind of lagging the rest of the sector. And now we've got a lower low down here. You know, I'm going to take this off the list. Not quite there yet. It did get an alpha gold alert a couple of days ago, I think, which I didn't mention. I didn't put it on the list, but not just a little leery of that one. Legend is a biotech and one of the best. So I run a scanner, best software, best biotech, best home builders, right? That kind of best IPO. And this comes right to the top of the best biotech. And that's a space you want to be in when the interest rates are falling. So really nice, just like a bull flag, but just a little soft bull flag holding very near to the highs, perfect looking uptrend. Everything is really ready to go. MACD is just about ready to trigger a buy signal, and the cycles are near a bottom, if not bottoming out altogether. IREN is not having a very good day, but it's not down very much per the chart, and it's just a big moving stock, really big moving stock. This one had, as I said, the alpha gold alert. I would like to see it build a bit better base here, and I'm not going to trade it until it does something like that, and we're not there yet. INTC, I think this one could go. I think this one could get a new lease on life. So it's had a really nice run after that big gap up on the government spending money on INTC. Got way up there. Everybody thought it was just going to keep going, and then it got kind of caught up with the rest of the market coming down at that peak. And now we're starting to build a nice little base, right? A nice little base under the 21, the 50 at the pink zone. APLD, we're long either shares or calls. I think it's shares in the live trading room of this one after the AlphaGo alert, and it's been nicely up since then. And then small caps, as I mentioned. All right, guys, I got to let you go. I'm sorry I'm rushing today, but I will get this produced, give you links in the main rooms. I'll be back probably in the room in about 20 minutes. God bless everybody. Have a great rest of the day, and we'll see you back in the room in a little.